JB here. Hope everyone's doing outstanding. September 9th, 2024. I hope the audio is better than it was on Friday. Um, had some issues, so apologize for that. Really quick to talk about the market, some of the names I'm looking at, and go from there. But yeah, take a look. The S&P, huge move to the downside to end the week, over 4% on the week. To the downside, Nasdaq nearly 6%. And that was the jobs report. It was kind of like a mixed bag. But now you read the headlines over the weekend, and it's like, oh, it was a weaker than expected data point and revisions to the downside. But that's happened. It just seems to me people need an excuse to take some profits, and we'll find out how this plays out this week. We have CPI data Wednesday morning, and then PPI data on Thursday. I think the Fed is pretty much on course already to cut rates. Now it's just a matter of it's going to be a 0.25% or a 0.5% in 2 weeks. I the hopefully for me, I just think cut the rate a 0.25%. You still have a chance to play a little catch up before the year's out and go from there. But I put on the watch list this morning. I always say I don't have my bear suit on, so I'm not in a position where I think the bias of where the market is set to go into a correction, a big bear market, or what have you. But I do think there's opportunities for downside, especially with the SPY under its 50-day moving average. And there's some names that have kind of overshot. And you take a look what happened from the August lows to where we were just recently. The financial sector, in my opinion, especially with this the rate cut cycle kicking off in a couple weeks, I think those names offer some opportunity. So I'll be looking for some more hedges on those over the next couple days and weeks. And then hopefully you find some footing. I put 535 on the SPY. I think that's a big spot. If you look at my charts when I put up my annotations from uh, my SPY chart, these are annotations not from today or yesterday. A lot of them are a couple months, couple years. And if I pulled my SPY chart back with the annotations, it's actually I think I've been doing the annotations on this exact SPY chart since like 2007, 2008. So it doesn't mean that someone has a limit or stop or what have you on the chart at that exact number, but I always talk about charts being it's a history lesson. So I think it's important to have areas where people thought stocks were attractive and where people thought they weren't attractive. So anyway, so that's that. So we'll see what happens here this week. Probably some chop here today. I would not be surprised to see a reversal. I kept saying 555 on the SPY. That broke. So once that broke, then 542 and change. We broke under that. We're sitting there a little bit above that this morning at the open. So or close to the open. Those will be spots I'll be looking at. And then IWM. And I hope we can get at least back to 215. That's probably not going to happen in the next couple days. But if we do get some weakness, 205 is the first spot on the IWM. We're down here at 208 and change. And then, not that I think we're going to hit the Japan Nikkei fiasco yen carry trade lows that we hit start of August, but then you start looking under $200. And the 200-day moving average IWM is 201.51. So spots I'm watching. And I sometimes I look at some of these pieces for direction, and sometimes you look at a chart like the amount of stocks over their 50-day moving average on the S&P, and you can look at the chart from a glass half full perspective or glass half empty perspective. And right now you look and I'm like, wow, it's pretty impressive that coming into Friday, 70% of the stocks on the S&P were over their 50-day moving average, and they were still 59% of the stocks were still over their 50-day moving average. So does that mean there's room for more downside? So again, I'm not putting my bear suit on. I just think there's opportunity to play some put hedges this week, especially into CPI data, and go from there. All right, so individual names. And first, I'll talk about TERN. TERN finally came out with their GLP-1 oral data this morning. Came in pretty much a little bit in line above expectations in regard to the weight loss. It's a very small sample size. So it's 28, is it 28 day? I don't want to have this up here, but I think it's a 28-day study. I think it was 5% mean weight loss, and different dosages. But I think there's only like 37 people in the cohort, so it's not a huge amount of a huge sample size. Uh, but I think the data was great, and especially considering it's a small cap company, I think there's room for upside. I thought if you had told me the data that came out today, if you told me that a couple days ago where the stock would trade, I would say over $15. Uh, the thing is adverse effects, and the adverse effects are great, except their highest dosage, and I think so. They have different breakouts. I think it's 240 milligrams, 500 milligrams, 750 milligrams. The 750 milligram dosage, and there's only 9 people in that cohort, that sample. 100% of them had adverse effects, and 33% are mild, 66% of them are moderate. If you look at GPCR data, and I love GPCR as well, theirs was totally different. People dropping out of the study, things like that. So I don't know if that's some of the reason why the stock's not trading up substantially higher than where I thought it would trade. Still like it here. Fortunately, fortunately, I didn't grab the October strikes, but may look to get some today if it breaks back over $10. Uh, it, High short interest. So people look at companies like like TERN, who have just a phase one study, and it's so far out where their drug possibly come to the market many years that it's such an easy short target. So they just said they're possibly going to get their phase two study getting going in 2025. So I mean, you're already only phase two 2025, then phase three FDA meetings, all advisory council meetings. There's so much stuff that goes into getting a drug to market, and it makes it an easy or attractive target for some of these folks who are looking to make money on the downside, just on that time. The scenario of where it takes so long for a drug to come to market. So hopefully that's not the case. I think there's you know the data alone will probably extinguish doubt around the company's drug, and then possibly open it up for some M&A. So that's TERN. Hopefully it can reverse course. I mean, it's still green, but hopefully shorts don't pressure it into the red. I hope that's not going to happen. I'm not going to rule it out. But if it does get back over 10, I'll add some October strikes. That's TERN. Clear Secure was added to the S&P mid cap, a small cap 600 index. Anytime some of these small cap names are added, I mean, used Clear is not really a small cap, but in regards to how they're all defined, I guess it is. Uh, Anytime some of these stocks are added to an index, there's buying, because it forces uh, folks to get into the stocks ahead of. I think it's September 23rd is when it's official for Clear. So it's probably the kick it needs, and you start looking. It's almost like a tight Bollinger Band setting up on Clear. A couple weeks ago, I was talking about the bull flag broke over 30, then it consolidated. And now it's almost like a tight bully setup. So still like it here. I still have my September strikes. May look for some October calls, play for upside. And then now I'll talk about some of the hedge or put positions I'm looking at. And so Goldman Sachs I had last week, and I put on a watch list. I think if you look at some of the financials, they're on a tear, and it's almost like they're not pricing in a rate cut cycle whatsoever. And typically when rates go up, it's good for financial companies. They make more on the money they hold versus how much they lend out, and things like that, right? So as the rates come in, the margins on the difference between people depositing money and keeping it in the bank versus how much they lend out, it shrinks. And because of that, their profits go down. And it's kind of shocking. It's almost like I was talking about last week with the inverted yield, right? The 2-year was paying more than the 10-year, right? So when that happens, and it happened in 2022, and it's happened for the last 255 trading sessions, whatever, until last week. So, that supposedly was going to imply that a recession is coming. And then last week, the yield started to go the other way. And it's the uninverting of the yield curve was going to cause a recession. It's kind of comical how they just take the headline narrative and just play that out to, rationalize a move in the markets, and most times they do it to get clicks. But anyway, rant aside, you take a look at Goldman Sachs. It's like if folks knew that rates were going to go up, that's good for banks. So you'd buy banks. If you had told people before they bought the banks that rates were going to go down, they would sell the banks. That's typically what happens. But Goldman Sachs, J.P. Morgan, Citi, all those names are pretty much right near all-time highs. So don't be surprised. I got some FAS calls last week. I did the Goldman spectacular speculative lotto puts on Friday. Don't be surprised, especially with Goldman Sachs under its 50-day moving average, if I add more speculative puts. Again, not that I have my bear suit on. I just think there's opportunity for downside. Um, ENVX, I'm not really, not much commentary to add on this. Down 9 straight sessions to the downside. I'll look to lock some of my October puts in when I get a chance. At some point, this name's going to have some kind of bounce, just because the company will come out with some press release, or there'll be some catalyst. Uh, but just I think it goes to 690 before the bounce. So uh, before it gets to 690, I'll lock some of my puts in. I'll ride the rest and see how that plays out. But I think that trades lower. And then two other names I'm looking at. So you look at Mastercard and Visa. I've done my rants over the years on Mastercard and Visa. I think at some point that sector, the third party processing sector, is going to get pummeled. And we're not saying the PayPal's or the Squares or any of the names in the cryptocurrency space. I'm looking at Mastercard and Visa, uh, Discover, maybe an American Express. But it's how is this sector not disrupted like the real estate sector? So anyway, needless to say, not only that, it's with retail sales and the consumer and all that fun stuff. You have all these rumors of a recession coming that obviously not going to bode well for folks using cards and things like that. So uh, don't be surprised if I add some speculative puts on Mastercard or Visa. I was looking last week, but I didn't want to add too many positions on the downside, but could be setting up, especially if we chop here or head lower, at least, short term. If we pull back just a little bit this week, just some more consolidation for the next leg. Mastercard and Visa are two names I'd be looking at, and then FAS. So I think FAS, and I have the October strikes. I think this is probably one of the better hedges for downside. And even if the market chops or heads higher, I think some of the financial names still might come under pressure. So I think FAS offers a nice risk reward. Calls didn't go up too much on Friday despite the big move. We'll look to close some of those out to cover costs when I get the chance and ride the rest. I think that's it. Still like Redfin here. SE Limited. It's probably either going to need a market rally or the China markets to get on a tear for those to go. And I think that's it. Let's have a great day, folks. I'll be back on audio later. Rock and roll.